Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at MLC, and I'm joined by our Senior Economist, Bob Kinane. Welcome, Bob.
Thanks, Sinead.
Bob, it was a strong end to 2019 with global share markets producing solid returns. Was this something of a Santa rally?
It was, but it capped off an extraordinary year. So if we put it in the year's perspective, the Standard & Poor's, the American benchmark index, was up more than 23%. And the Australian share market was up nearly 24% for the year. And what we saw in December basically encapsulated the year's gains. So if you looked at the Standard & Poor's again, the American share market was up 3% at record highs. So an extraordinary run in the scheme of things.
What about the Chinese share market? It produced extraordinary returns in December on the back of the trade agreement with the US. What occurred with the trade agreement?
Well, that's quite interesting. So the Chinese share market was up 8% for December alone, and the trade agreement was the key positive. So if we look at the terms of the deal, and we haven't had a formal release of the actual agreement, and the agreement hasn't been signed yet. It's due to be signed in the middle of January. But the terms that have been announced indicate that China will agree to buy more American goods. So if we think of farm goods, energy, manufacturing exports coming out of the US, that looks to be about $200 billion over the next 2 years. So that's a positive for the American economy. For the Chinese, they see a reduction in tariffs from 15% to 7.5% for about 120 billion of Chinese exports to the United States. But importantly, America will delay any further tariff increases. So what we have in essence is a trade truce in terms of tariffs. And for the Chinese economy, this is a very positive development.
Also a positive for the Australian market, presumably given our relationship with China. And yet the Australian share market lagged other global share markets in December. Why was that?
Yes, we had a very disappointing December itself, but bearing in mind we had such strong gains for the year, this was sort of like a mini correction in December. So our market was down about 2, and what you saw was a couple of sectors particularly underperformed. So if you think about consumer staples, they fell about 8%, and that largely reflects concerns about the Australian consumer. So when you look at car sales, when you look at retail spending, you can see that the Australian consumer is reluctant to spend. And so that was a bit of a concern, particularly for the consumer staples sector. We also saw some correction in information technology and the communications sector as well. So that weighed on the Australian share market. But all things considered, we had an exceptional year last year with plus 24% returns.
What about the Australian dollar? It's moved higher in recent weeks, now up to 70 cents against the US dollar. What was the reason behind that?
The key reason is probably the optimism over the trade agreement, and for 2020, a more positive view on the global growth story. So that helps the Australian dollar because it indicates there'll be stronger demand for our key raw materials such as iron ore and energy. So from that perspective, the Australian dollar, it moved from around 68 cents to 70 cents. But since in the first couple of weeks of this year, it's sort of like starting to correct back towards 69 cents. So it was a one-off sort of December rally, a Santa Claus rally.
Thanks, Bob. What about the increasing tensions between the US and Iran that we've seen in recent weeks? What is the potential impact for oil prices?
Well, it's a key positive for the oil price itself because Iran is a major oil exporter, but it also encapsulates the concerns about the Middle East as a stable source of supply. So what we're seeing with the assassination of this Iranian general is the Middle East has returned to the fore as the epicenter of potential global political risks and particularly doubts about future global oil supplies. So because of that, the oil price has to be built in a risk premium, and what you've seen is this strong rally in oil prices in the first week or so of the year.
Thanks for your time, Bob.
Thank you very much, Sinead.
And thank you for joining us.